Welcome to the Zacks Roundtable Review, a discussion of current events affecting investors as well as other topics of financial interest, featuring the analysts and editors of Zacks.com. Market opens up a new trading week amid some fresh concerns. We're going to try and get a read on them from our panelists who join me this time, Research Director Shiraz Mian, Equity Strategist Todd Bunton, and ETF Strategist Eric Dutram. So the new data came out of China and Italy over the weekend. We've got some concerns over weak data out of China and a downgrade of Italian debt.
That's right.
Anything to worry about here?
The Italian story, nothing new on that front. We knew that their credit was not exactly up to snuff, so no major surprise. The China data is a bit surprising, though. Because they entered the new year with a lot of momentum from the fourth quarter. And what we have been seeing in January and February has been a bit underwhelming. Now, they have the Lunar New Year. It fell in February this year versus January last year, and that produces some distortions in the data. But even when you combine January and February, and compare that to January and February last year, it's still the momentum has slaked off. From
talking about industrial production data.
Industrial production, retail sales, even CPI data, all this data that came out over the weekend. Yeah. It was disappointing, weaker than expected. And shows that the momentum that the economy had from Q4 coming into Q1 has slacked off.
So does this put a drag on our stock market? Is it going to kind of take some of the momentum out of our stock market, Todd?
It could, and one of my favorite stats is that the S&P is a global market index, and 45% of revenue comes from overseas. Right. A lot of that is China, a lot of that is Europe. So it's definitely a concern. People that say, oh, it doesn't matter because the U.S. is powering forward. No, it does matter, and it is a concern.
So maybe China's not going to be the world's manufacturing plant here going forward.
Well, it is. China will remain the factory floor for a while. The question is, how strong is the rebound that the market was pricing in over the last few months? At least judging from this data, it's not as strong as everybody's been hoping.
Well, I think there's been some concern that China might be losing out to some other lower cost producing countries, be it Vietnam, Indonesia, at least in Asia.
Mexico.
And then, Mexico has kind of been surging up the charts because the labor cost in a lot of eastern China has really been rising, and people are looking closer to home as a cheaper way of producing.
Right, which is why I made that remark. See, he's
up with it. I stand corrected.
So I kind of alluded to the fact that the market starts off this new trading week with less optimism. That's right. A little bit less optimism, but was the market sentiment too bullish anyway? Eric, you say maybe not.
I think maybe not, but now that things have been getting better with the jobs picture, it's kind of turned into what I'm going to call a George Costanza market, where you're always looking at the downside of things, and then now that things are good, we're thinking, oh, they're too good, and now the Fed's going to come in and raise the rate. So it's just always looking at the bad side of things. So that's kind of partially my concern. Before Friday, though, I was thinking things were a little more bullish, but now people are starting to get a little more concerned about the raising rates and some of these other issues like China. So it's kind of hard to say at this point, I think.
I'm going to get back to Friday in just a minute. Todd, do you think maybe there was a little too much bullishness?
Yeah, I do, and it has to do with the headlines, right? That the Dow is at all-time highs, the S&P is knocking on the door of all-time highs, and money is flowing into equity mutual funds, and people are expecting, stocks to double again over the next 4 years, and I think that's just totally unreasonable expectations. I think the big gains we've seen in profits, the big gains we've seen in stocks are pretty much behind us. Not saying we can't have solid gains going forward, but people expecting those double-digit increases in stock prices year over year, they're going to be disappointed.
But Todd, even when you talk to the average investor, they still aren't loving the market. They're like flowing back into real estate, and even bond ETFs are still they're still seeing a lot of inflows. Yes, we're seeing some pullback out of the longer dated securities, but a lot of the short term ones are still seeing a lot of inflows. So I don't think people have really given up on bonds or
No,
and
bonds are crazy overvalued.
Exactly,
for
yeah.
Sure, but
You noted in some of your writing lately, Shraz, that there is an over amount of bullishness in the market as well.
Absolutely.
What about Friday's jobs data? Does that underpin a market rally that we've been seeing?
It is. I mean, Friday's jobs data was, from any way you look at it, was good and positive. Now, the only caution I would sound about the data is that we have been seeing positive jobs data in each of the preceding 2 years as well. It's not unusual. Like we saw that in January, February, March last year, January, February, March the year before. It's usually later in the spring and then at the onset of summer that we see some spring summer blues getting underway in the market. So if we don't have that, this is good momentum and would be underpinning, as you mentioned, for some of the optimism. But I would second Todd's view. The markets is essentially shrugging everything. It's way too bullish about the outlook in the second half and earnings and the economy, and there's just no anxiety and concern.
So you don't think these fresh worries that we talked about at the top of the segment are any cause for the market to stall out here?
Well, the international worries are there, but there should be worries about the domestic economic scene as well. I mean, not everything is as bullish and as optimistic as the market is pricing in right now. That's at least my view. There haven't been that many takers for that in the market lately, but that's where I stand.
Okay, not much on the docket here, U.S. economic news this week, but we do get retail sales data on Wednesday.
That's right.
What do you think? Is that going to tell us exactly how the consumer is reacting to the higher taxes and higher gas prices?
it'll be very interesting just for the reasons you cited.
That's right.
Last month's retail sales were positive, but I think they're up 0.1% over the preceding month. And you're starting to see some retailers caution. We talked about Walmart before, how sales there are sluggish. Even some of the value-oriented retailers are starting to see the pinch. It'll be very interesting to see because, as people know, 70% of this economy is driven by the consumer.
Right. Okay. Anything else on anybody's radar that they're going to be looking out for this week?
The factory data is later in the week. We
Yes.
have the industrial production. We have the Empire State Manufacturing. We may see some positive momentum on that side.
Okay. Thank you all for that. And don't forget that we are going to, forgot what camera I was on there for a minute. We're going to be talking about the top picks of the week. That's in our next segment, so click right to it.